Heidi, ho everyone, and welcome aboard. Thank you for joining us for Trading Buddies Monday edition, and it is what, the 14th of November, halfway through the month. That means it's 6 weeks till Christmas. Fountain of knowledge, eh? Oh, thank you, Sam. I forgot to press the recording button. I'll get there, guys, one day. Too many things to remember at the same time. This old thing up here, the head just doesn't do it very well, I'm sure. It's sorry. All right, let us begin, shall we, and have a look at the pound versus the dollar. I think that's where we'll start. Eh? It's where we normally do, and I will attempt to share my screen. What's a good idea? There we go. All right, we do have a range, and as always, we attempt to break this range. Let's find out where it is on this day. So there's the high, there's the low, pretty clear. High there. No, not high there, but high there. And low there. Midpoint. Ooh, looks about the daily pivot and pretty much where price is. 1.174. What is the actual low? 1.1743. Okay, let's make that 1.1743. That's the low. The high is 1.1818. We'll make that so. There we are. And that makes the midpoint. 43 is 57 plus 18 is 70. Oh, sorry, 57, 75. Yes. So 37.5 would make us 80.5. Do we need to be that accurate? I think so. 80.5. That's not likely to change. The only thing now is to wait for the candle to close, which is a couple of minutes away. And if it's where it is now, I won't be taking a position based on why haven't I? Oh, sorry, guys. One thing I haven't done is checked out who's in the waiting room. I know I've got a few people in, but everyone appears to be in that needs to be in. Right. So if price climbs up to here, we'll place an order short. If price comes down to here, we'll place an order long. But if it's this close to the middle, I won't be doing anything at all because the middle is our entry point, of course. So it's just a matter of waiting and gap. Yes, there is a gap. Indeed, there is, Gary. And will it close? I'm hoping not. I'm going for short pound as per the weekly trade from last week, which is in profit, but and I'll update that in the those of you who did take that last week. The stops, I've moved my stops to entry on that. Haven't taken any profit, I've just moved my stops to entry. So we'll see how we go. Look, I really think this is a tough call to have a directional bias today, given the events of last Thursday, really. I had a little bit of a follow through on that on Friday. Today, are we expecting much of a follow through? I'm not. I'm actually expecting this to go into range, but we'll see. All right, there we go. We are very close to the midpoint. In fact, we're about, 9 or 10 pips away from the midpoint. It's one of those, I don't know yet whether that's the wise thing to do or not, to take the position. Look, we did it on Thursday and it didn't work. Work later. And I think we only got pipped out by a very small margin down here. So we went long here and our stop loss was there. had we moved that a little bit lower, we would have caught that move, but, you know, is what it is. That's something to take note of and maybe put it in our little journal bank and say, well, okay, had we had maybe 3 or 4 pips extra underneath our stop loss, we would have caught that move, but that wasn't the case. And today, do we do the same thing? Do we put our stop loss above the range? Do we put our stop loss above the high? These are things that we need to consider. Shall we place the order, guys? I think we will. It was 10 pips away from the entry, so let's do it. We won't place our stop loss in the obvious place. We'll place it where it goes under these rules, which of course is above the high or on the high, pretty much. Righto, so again, if you're placing this order, it is very much not a case. Oh, got someone in the waiting room. Hang on, I'll press the button. There we go. It's very much a case of wait until we've got something concrete to go, okay, this works consistently. Entry is at 1.17805. And the stop loss is at 1.1818. Shall we go one more pip? I think we will. 1.1819. And TP1, which is a bit of a misnomer, as I say, because we're not actually taking profit. We're just moving our stops to entry at 1.17. How do we get 305? Why'd that move? Don't know. That's weird. The low, 1.1743, is the take profit level, TP1 level. As I say, take nothing off at that point and move our stops to entry. TP2 doesn't exist and we're selling. Okay, so that order's in the market. Entry's there, stop loss is there. Stops to entry is not there, but it is about there somewhere. Okay, that's the pound versus the dollar. Where should we go from here? We should go to my update of pound Swissy, as I said. Ended here last week on a weekly bar, which was this one, Game Changer bar, which of course was with the big boss being the major component that's driving this market. And that, of course, was this big double top up here, or inverted, or sorry, head and shoulders. But every time it comes down here, we get a reversal bar. And they have proven very, very reliable. Game changer bars all over the place. So we're trading that again on the weekly chart. And as I said, I've moved my stops to entry, so that would be a no-lose situation. Well, let's hope it's a decent win situation. I did enter another one on Friday, Aussie yen short, more a freestyle trade than anything, and price at the moment doesn't look too fantastic. In fact, I've got a little bit of a niggling in my bones that is saying the Aussie is going to do well this week. Did I have that niggling last week? I can't remember. I think I did. Bottom of the range here, so we had to get through that, and we haven't. I may well choose to close this if we get above the weekly pivot. We've still got the monthly pivot helping us there as well. So I'm hanging in there, but we'll see how that pans out. It is the bottom of the range, but it is also on the weekly chart 1, 2, 3 amigos. So that is why I was pretty keen to get into this. Didn't really have a great candle to get into it, I've got to say, but there you go. If you want to follow it at all, the entry's at 93.21, I think. I'll just figure that out. 93.21 is the entry. So we're just above entry at the moment. And the stop loss is a very wide one. I'm getting out of all of this noise here. And the stop loss is at 95.75. And I think my first take profit is at 91.25 from memory. Yep. So pretty much inside that range. Let's see how that one pans out. Now today, I was pretty keen on actually everything that showed up on the market scanner as a game changer bar. First of them, Euro Aussie. Euro Aussie looks to me like it's put in a double top and a lower high here. Really only one issue on the weekly chart, and that was the position of the monthly pivot, which of course has stopped price in its tracks there at the close of last week. It's also, if I put my symmetry into play, it's also an incomplete cycle. The cycle being, of course, that big W. That said, if I go to my analysis chart, I think the big W probably can't complete, because I don't think it can get through this level here, or not easily anyway. It'll have a little bit of a pause at least. So maybe there's a little bit more in this before it does go south. But the game changer bar is suggesting that that won't be the case and trade it straight away. I'm not in that ballpark. And I think there's a far better trade than Euro versus the Aussie. And it's actually the pound versus the Aussie. And we'll come to that in just a tick. I have placed an order on that. There were only two game changer bars. Kiwi Swissy was the second of them. And I actually don't mind the directional bias, but again, the monthly pivot is an issue. In fact, it's probably more of an issue than it is on Euro Aussie. So very, very tough to take that short at the moment, but a break and retest of the monthly pivot, or go up to the other pivots here on maybe a daily chart. And if we get a bounce off the weekly, then I think that's probably a reasonable position to take, but not right now on the weekly game changer bar. The pound versus the Aussie was actually a game changer plus bar, which, for those who have no idea what I'm talking about, is a game changer bar the previous week, followed by an inside bar last week. Not only that, it is a break of that resistance level, come back under, and I'm looking for that to become support. So if I go to that chart, that's the order that I've placed. And it's also a range, and we'll come back inside the range. Potential lower high. Okay, it's not a lower high, but it is a one candle lower high, if you like, if there's such a thing as that. Bouncing off the monthly pivot, bouncing off the weekly pivot. I have no hesitation in taking that position. I'm taking an early TP1, however, at the low of the game changer bar the previous week. So I won't take anything off the table at that point, but I will move my stop to entry. So the reward on that is very, very poor if you consider the gap position, the risk position. So I don't want to, by any stretch, play that as a take profit area, but I do want to get safe in the market at that point. We'll see what happens. If you want to follow it, the entry level is at 1.7561. And I did stuff this up this morning for those of you in the Telegram group. I got the levels wrong. Stop loss is at 1.7825. 1.7825 is the stop loss, and that break even level, I suppose. Stops to entry level is at 1.7481. 1.7481. And then we'll think about taking some profit down here if we're fortunate enough to get there. That's pound versus the Aussie. A couple of others that I do have on my watch list. CAD yen's one. Let's have a look at that. Canadian dollar versus the Japanese yen. Lots of thoughts around the yen at the moment. Always is. I'm tipping that this strength, can I call it strength, in the yen is a temporary scenario. We have hit a support level here, recent support, range forming there, in my opinion. And I do expect that CAD yen will fill that range in at some stage this week. Whether it slips down here first or not is another story, but I think CAD yen is probably on my watch list as a buy. But I'd need to see something a little bit better than what I can see at the moment. I'm not just trading the bottom of the range, looking for a bounce off the pivots here and give me a higher low, then I'll look to trade it up there. That, of course, is the weekly chart. And this could happen on a daily chart, could happen on a 4-hour chart. And if that is the case, that range there that looks fairly clear to me is what I'm looking to play. So that's CAD yen long. I'm interested in that. Euro CAD. Look, I'm directionally unbiased on this, apart from the fact that it appears to be, again, the three amigos. If you look at where price is, it's very much at a resistance area. And the other way to look at it, of course, is that we may have a left shoulder here, we may have a head, we may have a right shoulder. Either way, we're at a resistance level. That resistance level could well be the neckline of this potential inverted head and shoulders. If it breaks and is retested, then reversal is on here. But if it doesn't, then I think we go into that range again and maybe can play that off the top. But I'm not committed directionally at all on that. I don't really know which way is next. I'll take my lead from what happens. As I say, if it's a break and retest of that area, happy days. If it's not, then a lower higher here does get me interested with those three amigos sitting there, and I'll be looking to trade that short. But at this moment, no, but it's at that inflection point as far as I'm aware. Well, as far as I'm concerned, not as far as I'm aware. And of course, Euro Kiwi. I know Ash is going to disagree with me here because he's a fan of the euro on an interest rate basis. I see this and I can't unsee the double top and the potential for this to be a lower high. I just can't not see that. So my bias is most definitely short. And I think, as I pointed out a couple of weeks ago, yeah, here it is here. The top of this broadening pattern has worked well, and it's come back through all the pivots, and a lower high here on the weekly chart would really get me interested in trading it down to the bottom. But I think on the daily, we may already have that scenario. The problem I have with that is the pivots. We go a little bit tighter. You can see at the moment the weekly pivot's holding price up and may well hold it up again. The daily pivot's involved there as well. I'm not sure what I need to see here, frankly, to get short. I love that candle. I'd prefer it if it was a green body, of course. I think I probably need to see a false break of resistance before I can actually take that short. But that's a big warning as far as I'm concerned. And maybe on a 4-hour chart, it sets up as a false break as well. Other ways to look at it, always is. We've got 3 high test bars sitting there on a resistance trade line. That's a slingshot scenario. Is it contextually correct? Look, I suppose it is. If you consider this to be a left shoulder, that to be a head, that to be a right shoulder, then your neckline's pretty much across here. And we've broken it and we've retested it. The one thing I can't say is that there's now decisive price action here. There's not. We don't know what's going on here, and nor does the market. So that's why it's too tough for me to call at the moment. But I am thinking that that range has been broken, retested and rejected. That gives me a bias to the short side. but I can't call it right now. I just can't trade right now. I want to see that false break of resistance perhaps, or break and retest of the weekly pivot would be interesting. Also giving me a lower high based off that reversal bar. Then I could consider it taking first profit there. I'm a bear, but it has to set up before I can take it. Cheers, Sam. Much appreciated. So that's kind of where I'm at the moment. A few things on my mind, no question. And I need to see price develop just a little bit more on a couple of those, but I am keen on the pound Aussie short, and I have added that, as you now know, as a position. G'day, my friend Ash. How you doing, mate?
Yeah, not too bad, mate. Not too bad. Yeah, do you know what? I agree with you on a lot of these things. The interesting thing is that the pound, is it?
That's the pound.
Yeah, the interesting thing for me is that I wonder whether this market has got a little bit over keen on some. I mean, okay, there's evidence that the inflation is lowered slightly, but it's just one print, and there's still a lot more for these central banks to do, and I wonder whether the market may have got a little bit too keen on speculating that the fight is done. I mean, you know, we've seen obviously over the course of really, you know, the previous kind of cycle, certainly stocks moving aggressively to the upside while the dollar was relatively weak. And of course, you know, after seeing such a parabolic move with the dollar, it was inevitable that things were going to change, and they were going to change you know, quite quickly. But I see the same with the CAD as well. You know, I see the same with the Canadian dollar. The Canadian dollar is nobody's friend right now. And I look at these markets, and I just kind of like get the distinct impression that that the market has maybe kind of started to price in something which isn't actually in existence at this stage. And because of that, I'm interested. I'll show you some of these things that I'm looking at, because, you know, I quite like things like silver for the short side and gold for the short side, and the FTSE for the short side, and I'll show you why.
So you're in the potential. I'm not even sure if I can call it that, but you're thinking this is a potential retracement rather than a reversal.
Exactly. To a degree. I mean, not 100%. I mean, the reason I would say to a degree is because I think the market probably will end up going in this direction. You know, certainly sort of like with certain things, you know, silver and gold, I think it will end up going in this direction. But I think to continue to kind of buy in here, it's almost like the counter that what we've seen with the US dollar, and it's almost failed. It's almost doomed to fail. You know, we kind of look at we look at silver here, and as I say, you know, I feel the same about gold. I look at silver here, and I see silver on these you know, relatively strong levels here that it's poked itself through, and it probably, you know, it's got a chance to kind of push back up again, but there's no accumulation pattern at all. It's just take it off, you know, let's go. And this here over here would suggest that there could well be a neckline along this area here. And if that's the case, then we do probably, you know, push back a little bit. And if we do push back a little bit, then we're much more likely to see a dip back down to these levels here that I'd be looking for. Somewhere back down into this area before really sort of like starting to look, which would at least give us the accumulation pattern that we probably need. So I'm looking for sort of a certainly a short-term move to the downside on things like silver, and same with gold. Gold does have a little gap for the day that probably needs filling first, but we got here's the gold market as well. And same deal. Okay, gold could push back up to this $1,800 mark and then start to push down. But I don't know. Will it kind of like push up there without any kind of without any resistance whatsoever? It would be a little bit surprising after seeing months and months of downside, and really just one print. And a print that came in at 7.7% rather than north of 8%. It's still high. Inflation's still high.
Yeah, it hasn't
That
gone
doesn't
away.
suggest. What's that, mate?
Yeah, it hasn't gone away.
It hasn't gone away, and do you know the interesting thing really to do with this inflation narrative is, it's to do with the CPI data, but more importantly, it's to do with the jobs market. And I was listening to Macklem's speech earlier on, and it's, this is why I think the CAD's a really interesting position, because I think with the CAD, all of a sudden the CAD has become a really attractive proposition for some upside, because what we've seen with the CAD, this is the pound versus the CAD. Pound has taken off against the CAD. This is a weekly chart, but let's look at it over the dailies. Over the dailies, the pound's taken off against the CAD. I mean, Kiwi has taken off against the CAD, but I'll be less interested in that. Maybe Euro CAD as well could be of interest at this particular stage. Going higher. I've got no qualms about that, because I think the ECB need to catch up. But over the long term, over the medium to long term, maybe is the better way to put it, I think that something like the CAD is really interesting, because Macklem effectively said, and obviously it's pretty much followed what's happened in the with the US dollar. He's effectively said, we need to get the labour market under control. They've got unemployment rate of 5.2%. That is better than it has been for many months, or it's at the lower end of the range really. And without the labour market starting to soften, then CPI data will remain elevated. They might come off a little bit. There might be a little bit of what the price stability, what the rate decisions might start to kind of help out somewhat, but it really needs to affect the labour market. And if we look at the PMIs, and we look at the GDP data, it's suggesting that will happen. It's suggesting that we are going to get a softer labour market, and it's also suggesting that with house prices that they're going to come down quite significantly. Now, if people are on variable rate mortgages and they can't afford their mortgage, and then they try and sell their homes at a lower rate, that means there's going to be a lot of pain for a lot of people in this particular situation, which then brings us to the stock market. So if we look at the stock market, what we've seen certainly this morning so far with the FTSE is the FTSE really start to take off. Now I'm really interested in a potential short for the FTSE, but you can't really look at the short. If we look at this on the hourly basis, then let's see where the hour ends up. But if the hour ends up under this daily pivot, that would still suggest that there's a potential short in the market. What I'd need to see is the 15 start to look like it is showing some downward movement, and probably through this area here, bringing us back down to a trend line which is probably in existence around about here, which will probably coincide with last week's weekly pivot, and it will coincide with these lows here. So I think that when we look at the FTSE, this is a weekly chart. So this has got some weekly resistance here. And the question always about support and resistance is, what is the chance of it breaking, and what is the chance of it rejecting that particular area? Well, if I sort of think about the state of the economic health of the globe, the economic health of the globe isn't particularly good. And central banks haven't really changed their rhetoric. The only thing that they've really said, and the only thing that I can see that is likely to happen, is that they slow the pace of interest rates. But if interest rates continue to go higher, that's going to continue to choke the economy. It can choke the global economy, because all countries are doing the same thing. So that would suggest that when we get to resistance points, like in the FTSE in this weekly, that this would potentially fail. I feel the same about the NASDAQ. The NASDAQ may also have a little bit higher to go, maybe into the upper end of a range. If that's where the range is, it be. It looks like it's going to be somewhere around about here. So maybe sort of into the upper end of this range, meeting this horizontal level around about the 12,600, 12,700 level. Then I'd again be looking for shorts in the market. that doesn't mean that I don't think that there are currently longs, but I do think the market's probably got a bit ahead of itself, and with some of these pushes to the upside, there may well be reversals coming, and reversals that take us lower than the previous lows. I think that there's still a lot of problems, coming down the path, and that does kind of like, as I say, that puts to me the US dollar looks like an interesting buying opportunity at some point in the near future. The CAD looks like an interesting buying opportunity because they're both solid economies, and they can take that pain. So yes, I think the euro will rally off the back of having to raise interest rates, but the economy's so weak, they are eventually going to have to stop. So they catch up, and then the dollar and the CAD sort of starts to take off again. That's the way I kind of see it, which would put gold back, it puts silver back, it puts the global economy in a situation where it's being choked, which then puts the Nasdaq and the FTSE back. So I'm sort of sitting here watching and waiting, mate. That the market's opened extremely keenly so far this morning, but I'm not convinced that this is the overall picture that we should be looking at. We got lots of CPI data this week. Does the CPI data start backing up what one data point in the United States is stating? Two, if you count the unemployment numbers, I suppose. I don't know. I mean, what do people?
Indeed, we don't know yet.
What do they consider though? What are they considering a significant number? Because if it's just a bit of a dip, surely that needs to continue for the next 3 months. That can't just do. If it's a significant dip, okay, fine, but it's got to be like 1.5 percentage points lower on the CPI to be significant, to show that central bank action's really starting to filter in. We know it will do something eventually, but has it started to filter in? Well, the jobs market doesn't fully suggest that, and that's the big problem.
Well, absolutely. The charts are not saying that. Also, the charts are saying one print. That's exactly what they're saying, because we've got massive bars last Thursday.
Yeah.
The end.
Yeah.
We don't know what's going to happen next. We really don't know what's going to happen next in terms of technical analysis. And it's right now that we've got to wait to see what that outcome's going to be. And if that takes more CPI data, as you're suggesting, then I agree with you 100%. We're not going any higher anytime soon. I don't believe.
Yeah. Yeah, well, not too much. I mean, as I say, the Nasdaq's a really interesting one, because does it get to the top of the range? Maybe it does, or maybe we just get to this horizontal level here, which is also, quite an interesting point. That particular level is around about another 3 to 4% higher than where we are now. But that would be the start of the bearish, I think, the start of the bears coming back in and saying, that we're not so sure about this rally here. So if it pushes beyond that particular point, the bears will probably come back in here. And if it pushes beyond that point, then fine. I'll accept that that the economic situation is probably doing something that I'm just not aware of, and the charts are probably expressing that.
Let me give you another scenario on that one before you go anywhere.
Yeah.
And I totally agree with your analysis, but have you got, what's the level I've got? Have you got a level at, let's call it 11666, around there somewhere? Probably pretty close. No, be underneath where you've got that white dotted line.
Yeah, I mean, these are the futures, but so somewhere around about here. Yeah. I've got that, mate.
Okay.
I know where you're looking. You're looking along this particular horizontal level here, right?
Yeah, 100%.
Yeah.
So my contention would be, if you wanted to trade this early, and I probably do, I'm interested. I could put a short underneath Friday's bar and call that a false break and take some profit at the weekly pivot. Weekly pivot's about $53 underneath there or something like that.
Yeah. I'm down with it. I'm down with it. Look at the FTSE. Look at the
Yep.
FTSE now. I mean, the FTSE is has surged to the upside. Look at it now. You
Yeah.
know, this is the first sort of half an hour of trade, and what we've seen. I mean, that is a really interesting looking bar. That one. And I'm not saying that you know, traders. Well, there are obviously some traders out there that agree with me. I mean, you know, when you look at that. I mean, we can't do anything at this stage, in my opinion. Now, this is based. It's I mean, it's basically sort of a range, isn't it? And there's sort of like some back and forth going on within the range. Within the range, it's telling us that that there is both strong opinion, you know, the first 15 minutes, and then some counter opinion, which is suggesting that maybe, and as I say, this is where the hourly charts are becoming really interesting. Maybe if this it closes anywhere below 73.50 on the futures, this particular downtrend on the hourly is still intact. You know, maybe that's what it's basically saying. But right now, there's a little bit of a battle going on with the bulls and the bears within this particular area. But it is a bit of a range. And if we were to sort of, you know, have a look at it on a pattern, it looks like a some sort of triangle pattern.
What chart's that, mate?
This is the FTSE. This is the FTSE hourly.
Hour, right?
Yeah.
Wow. Apart from that support level directly underneath, that's a fantastic bar for me to trade.
The current one, it's not close. You mean the 15?
No, the chart you're on.
Oh, the current one, yeah.
Oh, it's not closed, right? Okay.
It's not closed. We've got to wait for the top of the hour. But this is what I'm saying, mate.
I think 30
by the time. Sorry, I was just going to say, by the time the hourly closes, we could get a really interesting looking picture here. And I'm presuming you're going to be looking for a short under this bar.
Absolutely.
Yeah, well, I will be doing the same. But the only difference is that I'll probably try and wait for a breakdown on the 15. So I'll probably look for something like this to happen. You know, if we can sort of like continue to the downside here and break through that bar, then I'll be putting an order in here on a limit order here on the sell side, because what I'll anticipate is it coming back up and testing this level first and then going. But you know, we also got to bear in mind here, and I'll be looking for these lows down here. But what we got to bear in mind here is that there's a weekly pivot here, so we're currently above it. We get below that, plus below the trend line. That's going to look really interesting. That's going to be a really significant signal. I think it could be a significant signal, and it might be that this pattern needs to be, you know, slightly less scruffy. Maybe this is the pattern we're really looking at here. That looks pretty good, actually. So back within this range here is going to be the FTSE is going to look like it's in a little bit of trouble. And as I say, pushing to the downside, you know, which brings us to the dollar. Difficult one, because it's, you know, look at that though, mate. I mean, that is off one CPI print. And obviously, you know, and this is what we always say, you get a parabolic move to the upside, whether it be on the dollar or gold or Bitcoin or anything else that you want to mention. The greatest likelihood is not that it comes down, but if it comes down hard. And this is really what we've seen with the dollar. But the big question really with this is, and it's got a level of support below it, and maybe it comes in a little bit deeper. The question really with the dollar is, if this is on speculation that the Fed are about to ease policy, then speculators, in my opinion, have got way ahead of themselves. And
yeah, look, can I just add there? I think the reason, and we spoke about this and have done for weeks, the reason that the dollar has come down so hard is that, as you say, it went up so hard. And I won't even call it smart money, but I'll call it the market. Once the market had a reason to suggest that that resistance level is valid, and the reason came with the CPI print, it just magnifies the sell.
Yeah.
And that's what we said from the outset, right? This
Yeah.
is too much. It's overreaction.
Yeah.
And for that reason, it's very, very difficult to go short right now. Not saying that short is not the right way to go, but right now it's very, very tough to jump in on that. Very tough.
Oh, for sure, mate. I mean, you know what? I wouldn't be going short here anyway. Do you know what will the thing that will probably drive this week? Because we're really looking at a chart of the euro dollar and maybe the dollar yen here. The thing that will drive this week is the CPI data from the euro. And again, you know, this has got incredibly keen very, very quickly. The Central European Central Bank, they need to fight inflation. They haven't really got much choice right now, but their economy is slowing a lot faster than everybody else. I mean, it didn't really ever recover. So their economy's in a difficult situation. And if we look at the labor market for the Eurozone, what we get is prints of here we go, unemployment 6.6. Yeah, I mean, to be fair, it has strengthened quite a lot. 6.6% is, you know, it has strengthened. So maybe the labour market isn't, because this is what they're all looking for. They're looking for the labour market to start to weaken. 6.6% is not a good number, but it's better. But it's a better number than they've had for quite some time. But they've
comparatively
still got,
it's not a good number, because you know most developed countries right now are around the 3-4%.
Exactly.
Worst,
Yeah.
you know.
Yeah. Certainly within that sort of range. You're absolutely right. I mean, it's a different economy, of course, so it does kind of change the terrain somewhat. But again, you know, if you've got high unemployment in a region, and you've got falling house prices and rising interest rates, that exacerbates the issue down the road when people do potentially lose their jobs. And I don't know if it's the same in Australia, mate, but the headlines I keep reading is company going to the wall, 1,700 jobs about to be lost. You know, this seems to be the kind of narrative that the unemployment numbers that we are seeing are not yet reflecting some of the headlines. You know, Facebook, Meta, they laid off a load of people. We're talking about Amazon, we're talking about Apple, all laying off staff in the headline. But this isn't yet filtered through to the data points. So you know, whether that's because it's delayed or whether that's because there's another aspect of the job market which is still buoyant, I haven't looked into. But you know, I haven't read quite as many you know, of these numbers as previous, or maybe I'm just more aware of them. But there's lots of things.
They're the big headline act, really, aren't they? I mean, you're talking big companies that have fallen from grace in an incredible amount of, you know, volume. Tesla.
Yes.
Meta.
Yes.
Oh my God, Father! He's lost a whole truckload of money, and of course they're going to have to shed people.
Yeah.
Absolutely.
Yeah. And then you've got, you know, and of course you've got the crypto space as well. I mean, FTX has just gone down, so that's going to cost a lot of people a lot of jobs, because that was a big player. So there are jobs kind of like starting to fold. The other thing with this is that the yield curve and the what Jerome Powell also said in the last minutes was that he wants to see the interest rate effectively the earnings of workers substantially above where the interest rate kind of like lies, you know. So where inflation lies, so until inflation really starts to kind of like come down, then their job isn't done. Their job isn't finished, and also, you know, with the labour market, the job isn't finished either. And this is the other thing about the unemployment numbers. If the labour market kind of like remains tight, then it exacerbates the issue, because it does push prices up because of those wage pressures as well. So they kind of, they need a lot of things to sort of like start to come back into alignment. But
it's a
there isn't.
balancing act.
It is, mate. And the screaming thing to me is, out of all this, is that it is just an all-out mess. And when you think about a mess, you think about companies and how those companies are going to get affected, which brings us to indices. And to my mind, it makes indices possibly one of the easier places to start to project what's going to happen. I think that there's further downside for these indices. I think that some of the pain has already been felt. US interest rates are at 4%, and I don't think they're anywhere near finishing. I think that, we could get to 6, we could get to 8, who knows? Because every single time the Fed raised the interest rates, the dollar tends to weaken a little bit because the expectation is that'll be it for now. But that's not really what's being said. And that's not really what's being projected through the data, because again, the data is just one small dip in CPI data, and we get a slew. I don't know if you've looked this week, mate, but there's a slew of CPIs this week. We got Canada, we've got the United Kingdom, we've got Europe. These are really sort of like significant places. Now, what you were saying about the Kiwi, I kind of agree with as well. I like the Kiwi Aussie short, but the problem is last week we got no COT data because I think there was a holiday in the States on Friday. So we're waiting for COT data today. So I'll know a bit more by Thursday, which is a bit late, about what the COT data is suggesting as well. But the fundamental picture right now suggests that this week is going to be tough. And if you're going to be trading this week, then get yourself safe before those big numbers are released, and just look to those big numbers to help give some catalyst to the move that you've got. I certainly wouldn't close positions. If you've got positions open and let's say you've got a euro long and you got those positions open before the CPI print, then I'd want to make it safe, but I'd also want to stay in the position because that really could start to move the euro significantly. You might get a really nice pop this week. Of course, the opposite could happen as well. So whatever you see, then just manage the trade properly and see if it actually helps things out.
Yeah, look, I think early profits is name of the game, and I often think that and fail to do it and wear the consequences. If you do fail to do it, you will probably wear the consequences. Certainly if the market tends to react not as you might expect to interest rate to CPI data, which oftentimes at the moment we expect the market to do A after a number, and it does completely the opposite of that, because we're in very, very different times, I believe. Interest rates going up are not necessarily a good thing anymore in this environment. So, it is a bit tricky. George, reversal or retracement?
Morning, George.
Morning. How are you doing?
Yeah, we're good. Thanks, buddy.
Mate? No, I'm good. Thanks. Thanks for indulging me, and sorry that I couldn't join you guys earlier.
It's not a problem, mate.
No, not at all.
We'll jabber on till the cows come home, so it doesn't really matter what time you come in. It's all good.
Let me have some powers, then I can.
Oh, yes, right. Charles in charge. That's me.
There you go. So I've only just come into the market, but I've got some early thoughts on the UK 100 and also the euro.
Hang on,
look at that bar on the UK 100. Look at that bar now, Jeff.
Whoa. That's what I said. What did the 30-minute look like? You didn't hear me, I don't think. Is that the 30?
Yeah.
No good to me. That's too big.
What you got, George?
Well, let's. Do you want to pop on the daily then? Let's look. Okay, now I can start sharing. All right, good. Hold on a second. So, UK 100. I had you guys. I think we're all looking for shorts, which is fantastic. So on the daily, I think still the driving force is the bears that created this double top, lower high, etc. So
Man, look at those game changer bars. Every one is a winner. Unbelievable.
Yeah. I mean, if you can catch those either in the forming or even after the fact, I mean, there's opportunities there. So I'm looking for shorts on the UK 100. The measured move suggests that we get down here. But when I'm trading today, if I get the setup, which likely is going to lead to the break of that low, I have to remain aware of this ascent in 10 EMA, as well as these lows here. So it's possible that we can get down there with some dramatic selling, but I'm going to wait to see how we break beneath this. If we break beneath these levels, then we're really going to get there. We might get there today, who knows. But it's also possible that after good selling, which can give us some good profits, we might get here and start to create a test of the 10 EMA, which on the 5 minute would give an opportunity to kind of take a reversal trade. You know, if it happens within the time frame that I'm in the market. So going down to the 5 minute, it's always interesting, you know, when you're looking at the market and saying, oh man, this is beautiful. Wouldn't you just give me a lower high? And it doesn't give you a lower high. So you just gotta wait. So that's failed break above the 50% of Friday's range. And I would have wanted by this time some kind of a lower high anywhere within there. But if I don't get it, that is perfectly fine. I'm not going to sell in the middle of the day's range. You know, that's the open. This was the low of Friday. So I need to wait either for the market to come back up here, give me a better price to sell off. Then I would do that, but I would need to see now double top. I need to see a lower high or some other reversal. And then stop will have to be a measured move because, I mean, that high of yesterday is still, where's my measured move? Tempting target.
How do you treat that, George? So because you've got that, as you say, you know, today's range is you know, we're within today's range. So if you got your double top and the lower high before you get to the bottom of the range, would you look to take profit there, even though your measured move is much lower, or would you just see if we go through it?
Yeah, I don't very rarely, unless I have to go out somewhere. I don't take profits at these lows. I sit and just hope that we break through it and get a little bit more profit. Yeah. So yes, I mean I'll be very aware back at the open at the low of yesterday that there might be a little bit of a pullback, which is why I only take my first trade here and hold, hoping that whatever happens here, we do break through, pull back, then I can start scaling into that trade.
Yeah.
So, I mean, unless we get a dramatic bounce, reversal, and it starts to come back. I mean, my stop is going to be, okay, let's talk about the stop. So the stop starts off somewhere here, measured move, whatever. If we get and start to break beneath these lows here, and whatever happens, by that time, the stop is pulled down, probably at break even, there'll be a technical level there, a little bit better. Then I'm just going to wait and see what happens. If it comes back and threatens to stop it, fine. If it stops it out, that's fine. But if we then break through, pull back, give me another level, pull the stop down, and I really start to scale into that quite aggressively.
Got it.
So I am looking for shorts, and just bearing in mind, I mean, if we break beneath the low of Friday, we're still way up here. I mean, these levels are still a long way to come, so we can still go quite a bit if we do. So that's my thoughts on UK 100.
Yeah, I mean, you got the same target as me as well. I mean, I'm not looking for a big reversal here, just a bit of a pullback.
Yeah. Euro, interesting enough. I mean, so this, if you did a measured move of this huge outside candle that we had here, takes us up to there. And that level, interesting enough, I know you've got some other levels that you have here. Let's have a look at that. You've got these levels here. that, in the bear channel and bear is going to defend. But I think the more interesting thing about this level is that it's 50% of the range that we have of 2020. It's a midpoint. So that's going to have as much interest to traders as parity had, because whoever, bulls want to put the market above that and start to reverse as much as they can of the range so far. Bears want to just, push back into this range. So I think that at that level, the bears are going to come in. There's potentially a reversal that will come in there. Because, as far as the market is concerned, the measured move of this is only getting us there. It's not going any further. So I will look on euro. If we break above the high of Friday, I'll look for setups just to ride with the momentum and see how far we go in a bullish momentum. And if we get there and the bears don't come back and the bulls smash through, fine, we'll stay there. But if we get a reversal in the day, we come back, we'll look at that. So starting off looking for bullish momentum to see if we break above the high of Friday. It's also just above this test of the channel. So very interesting area that we presently are in. It's kind of my early thoughts on the market so far, gents.
Like it, mate. Yeah, I like it. It seems like relatively similar to what we're thinking, and I agree with you. That 50% retracement could be a really interesting point, because if the market gets there before there's anything significant, and CPI data may drive us up there, today over the course of the week, possibly. It might be something more significant than that. But if we get driven up there before anything significant has really happened from the Fed, then I think there's a decent chance that all of a sudden, the Fed come back and say, "You guys have got this all wrong," and then the dollar starts to rally again, and the likes of the euro come crashing back down again for a period.
Yeah. Have you got a feeling in your bones, George, that is the case, or the reverse of that is the case? As I said from the outset, are we reversing, or are we pulling back?
I think.
Or you don't care?
I don't care, but I think.
I knew you'd say that.
I've got to see it. I'm kind of stuttering because without the price action, I'm fumbling in the dark. I want to see what happens at these key levels, right? So this follow through was fantastic by the bulls, but we can't forget that it is follow through above a trading range. Outside candles follow through above a trading range, and we're just getting to these levels. So there will be probably higher probability than not a pullback. There has to be a pullback. At some point, there has to be a pullback. Whether we get to there and pull back, but the pullback is going to come, and we must trade that. The reversal, the bears just have to step out, and it can't be a small reversal. They need to give us something clean. That's a clean reversal. That's classic textbook stuff. That's classic textbook stuff. It's those kind of reverses that we don't want this kind of, we kind of wonder what's happening, going sideways and eventually. So if we get a 2-bar reversal, anyway, then we can say a reversal. But until then, I think we must anticipate a pullback to test the EMAs and come off these levels.
That's interesting you say that, mate, because actually, this is how I feel about many sort of products against the dollar. And I don't know if you looked at gold as well, but gold appears to me to give us a very similar look, where and silver as well. But both of them, really, because this is all about the dollar. This is what we're talking about here is the dollar. We're not really talking about the euro. We're not really talking about gold. We're not talking about silver. We're really talking about the dollar. The dollar's come down hard. And the reason that all these things have rallied against the dollar is because of the CPI data. Do we kind of get that point where people wake up and go, maybe we overreacted a little bit, and these markets pull back, or are they waiting for another data point? I don't know, but all of them are suggesting that a potential reversal from this particular point that is the significant aspect is on the cards. And as I say, I don't know if you looked at the gold chart, but the gold chart does appear similar to me, where we seem to have hit a top of a range, and we've started the week, and do we sort of like get a little bit of sobering up, and people start to kind of take some profits, you know, more important, not sell these things off, but start to take some profits.
Well, you know, anytime that I mean, you had the dollar chart up there, that huge bear candle. That's not different in terms of the market structure or the dynamics. If I'm looking at the 5-minute chart and there's a huge bear candle out of nowhere, whether maybe it's a news or just a surprise candle, it's the same kind of forces. Now, when you see that, you just step back and say, okay, let me give it 5 to 6 candles and see what I get. Will I get out of that bear candle a double bottom coming up? Will I get a pullback to the 50% of that candle? Or will I get continuation? And it's exactly the play that we have now. With these charts, if you want to think of them as the inverse of the dollar, it's exactly the same thing that's been played out. So are we going to get at these levels a double top, okay, an attempt to reverse the market? If we get that, our first thought is just a pullback initially, okay, until we get more strength. So we are definitely in the zone where there has to be some form of a pause in the market, which can come in the form of a double top. Worst case is just a prolonged trading range like we had here.
Yeah.
Before any further acceleration, and which brings us back to this level. You know, if we're going to get acceleration, it has to be beyond this measured move of the huge candle, beyond this 50% level of the year's trading range. But that less often are we going to see 1, 2, 3, 4, 5 strong candles breaking above that. We're going to see that pullback coming up of some sort. I mean, easy one would just be up, down, double top. Prolonged could be a wedge top, 3 pushes. Worst case, which, you know, makes it trading more interesting, just a trading range starting to form at that level.
Yeah.
It's interesting because we've been waiting for this potential for so long.
Yeah.
I wonder, is that going to be the case? Like normal, right?
Yeah.
We all say this time it's different is a whole lot of rubbish, right? But sometimes this time is different. And this time, to me, is perhaps one of those times where the market has been waiting for so long for things like gold in particular and the dollar to reverse, right? It has been waiting for so long for that to happen. I wonder, do we get normal chart patterns at the moment? I wonder. I'm just throwing that out there. I'm not saying we are. I'm not saying we aren't. I just think it's an interesting scenario that perhaps we are on a flip flop. Who knows? I can't answer the question.
What's a normal chart pattern? It's if we step back, we kind of say, hang on a second. A normal chart pattern is a good old market cycle, right?
Yeah.
We're in a trend, range, with a reverse or carry on after the range. And I think just because of where the market got to, it kind of makes us think that there may be something different, but I don't think there will be. I think the same kind of price patterns we've seen on charts forever and ever are going to materialize. I mean, these charts, this is classic for all of us. Or bear channel, we've all been schooled on this. Now, you know, we're breaking above the bear channel. How far are we going to go? And when we get to some level where I've just plunked in this measured move of this little trading range here, everything is kind of pointing into this zone where the bulls, if they've taken over the market, at this point, they're going to have to fight through a typical attempt to reverse, which could be in a trading range, So we're back to our bull trading range. If the bulls are strong, then breakout, pull back, and voila, we'll look back and say, hey, hang on, this was the whole reversal pattern that we all should have been watching to see. But if the bears are strong, they're saying, well, fine, profit taking, bulls are tempting, allow the trading range, and then we're going to come back and start to break out beneath the trading range, and we start the whole cycle again. And this time, if we allow our imagination just carry on after that trading range, and the bears get down here, they're going to say, well, fantastic. Now we've allowed the reversal attempt to work. It's failed. We are back in a proper cycle, and we're going to break beneath that low whenever that is. And let's just take this euro down, and voila, there's still more potential stuff that we can talk about. So I think from a price action, the only thing about this is you kind of figure out where in the market cycle are we? And that's going to have to come with the next few days unfolding, driven, of course, by the fundamentals. Then we all get clarity and say, oh, fantastic, that's where we're in. But in the meanwhile, you just got to keep trading as it comes. I think it's more frustrating for longer-term time frame traders. Because if I was trading the daily or the weekly, I'm kind of, where do I put my stop? Do I put my stop down? Well, technical level, I've got to put my stop here. And I'm thinking, well, if I'm buying here and taking my stop here, what am I thinking the measured move is right up there? What are the chances going to break above that? Or do I say good for the bulls, break out, follow through? Let me wait now just for a pullback to the EMA. Happy to take the trade, put a stop here, and see if we can break out leg one, pullback leg two. Or take a trade, put the stop here, go away, and come back in March and see what is done.
Do you know, mate? I mean, go on, Jeff.
No, I was just going to say, as one of those longer-term time frame traders at the moment, George, the only thing that I'm doing is steering well clear of anything that's got a dollar.
That's wise.
I was going to say any long-term time frame traders that are taking along at this particular level are following completely the wrong set of rules. I mean, I don't know why you would trade right into resistance, even if you think that's going to pop up a little bit more. The risk to reward ratio is abysmal. So you'd be waiting for a pullback. In my opinion, if you're a long-term investor, a long-term trader, you're waiting for a pullback to kind of give us something.
Yes, you don't have an option. Yeah.
So yeah, hopefully nobody's doing that. But great stuff, mate. Really, really interesting, and especially after the week we've had last week, and it's another interesting week this week. Little bit cloudy. No COT data released as yet, but we get it later on. So I think it could be sort of a bit clearer as we go. I think what you're saying, Jeff, about avoiding dollars, you'd probably put under the same umbrella, certainly until Wednesday, some of the ones that are going to be so heavily affected by data, that the likes of the pound, the likes of the CAD potentially, and the likes of the euro. So that does leave the Kiwi, the Swissy, and the Swissy's got a few bits and pieces, but the Kiwi, the Swissy, and the Aussie are probably maybe the more safer markets to trade right now, and looking just for something a bit more gentle. But yeah, interesting to see what happens. We'll catch up on Thursday and talk about what the data has given us, and we'll talk about what the price action has given us. But the way I'm looking at this market, it's probably it's got a bit overexcited from what I can see.
I'm thinking very seriously. Sorry, George, you go.
I'm saying, you said it's overexcited or overly excited?
I don't know which. I'm not quite sure of the.
There's a fine line there.
I think it's got ahead of itself. I think it's got well ahead of itself, and I think that there's if not a pullback here, I think that the more interesting play for me right now is a pullback in the likes of gold, in the FTSE, in the Nasdaq. Pullback, or maybe even we resume what the primary trend is really showing us. So I still think the dollar might have more upside, because I still think that Jeff's level on the dollar, which we were looking at a few weeks ago, which is the previous all-time highs, I still think that that's got a chance to be tested. Yes, we've seen this big aggressive move down. Whether this reverses the price action of the dollar over the longer term, I'd have a huge question over. I just wonder whether what we're actually seeing here is a buying opportunity for the dollar when things settle down, because there's still a chance we get to those highs. That means that there could be a potential selling opportunity in gold as we still possibly push down to 1600 and below. So, so I think that over the course of this year and next year, there could be further pain coming for some of these risk-on assets.
100% with you. I think that's where I'm situated as well. I think we're getting, or call it what you want, they're the same trade. Gold, silver, euro, doesn't matter. They're all the same trade.
Yeah.
If you want to trade the dollar long, then any one of those 3, 4, 5, you can just pick the player short. And I agree with you. I think the market has reacted too strongly to what they've seen thus far. And I'd be very surprised if it does follow through this week. I think consolidation at the minimum, retracement or reversal of that move at the max. And I think we're just going to go into a range until we get the next set of data, frankly.
All right, guys, well, let's wrap it up. It is top
so
of the
you
hour.
haven't got one of the week, Ash? You haven't got one?
Oh, I mean, my one of the week was actually the Aussie Kiwi, but my Aussie Kiwi short, that is. But the problem is there's no COT data. So, if the fundamentals kind of like point us towards that, and the seasonality do point us towards that, but and also it keeps well away from some of those currencies with big data points. But there's no COT data, so it's only 2/3 of of conviction at this particular stage. I'll be able to tell you the trade of the week by tomorrow. So for right now, let's call it the Aussie Kiwi, but short. But it might well change when we get the COT data in.
Okay, when's the pound news? Is it Thursday?
There's pound news Thursday, I believe. And there's loads of stuff. I think there's stuff with the pound maybe even earlier than that. But I think that is the CPI numbers on the pound. We will double check.
Okay, I'm going to stick with pound Aussie short, but you need to be safe before that print on the CPI.
CPI Wednesday. Wednesday night. Yeah, Wednesday evening for the UK.
So we've got about 48 hours to go, guys, to get safe in the market short on pound Aussie, which hasn't triggered yet. So
Wednesday for the CAD as well.
That is my trade of the week, and we'll see how that pans out. We'll have a result by that, I would imagine, on Thursday. George, you just want to see the price action, right?
That's all I want to see.
All
right. By the price action.
And who would blame you? Absolutely right. Okay, guys, let's get out of here. It's dinner time.
Fantastic.
Here. More importantly, it's cocktail hour. So I'll go in and take advantage of that. And we will see you guys on Thursday. George, on Wednesday, you've got which session?
Live trading profits. By the way, the Wednesdays at the market is no longer public and free, so that's why I'm not talking about it. That's only for guys on subscription. But the live trading profits carries on every Wednesday at 12:30. I'm giving my local time, so that's 6:30 p.m. Sing. 6:30 p.m. Sing. 45 minutes every Wednesday.
Okay, if anybody wants to take advantage, and you've been very generous with your time on the other side of that, how would they get involved? Good question, right?
Yeah, no, they get on to the office guys, Marlon, James, or go on to the sales page. They will see Wednesdays at the market with George, and that's part of a year-long coaching process that includes one-on-one coaching, workshops, etc. So really, I think it's a fantastic deal for personalized coaching.
Awesome.
Yeah, brilliant.
Thank you, mate. We'll catch up with you next Monday, of course. Have a wonderful week. And we will see you then. Ash, see you Thursday, mate. Have a great week.
See you soon, buddy.
I've got
Thanks,
to press some
George.
buttons.
Right. Cheers. Take care.
Have a wonderful. Oh, Lewis, we forgot to say good day to you. Sorry, we've been just so tied up.
Oh yeah, sorry, Lewis.
You go, Ash.
Well, just a quick howdy. I didn't look at that. I agree. I like the Aussie Kiwi short. Good man, and gold short too. He's with me. He's with me. He's with us. He's with us all.
I've been calling that short for bloody 3 months and haven't got into it. There you go. Have a great week. Bye bye for now. See ya.